All right, in this video, I'm going to be talking about the missing piece to high probability shifts in market structure. I have made market structure videos in the past, but I'm going to expand a bit more because I haven't really touched upon this thing as, well, I mean, I have touched upon it, but I haven't really gone into, I'm going to go into a lot more detail on this little missing piece here because it's so important. And if you don't have this missing piece, then your market structure shifts are always they're going to fail the vast majority of the time if you don't have this. And this is probably, I would say absolutely the biggest issue that I see with traders when they're trading market structure, and why they get tagged out over and over and over and over and over again is because they're missing this key piece of knowledge right here that I'm about to share with you. Okay. I've talked about in the past, of course, the importance of, liquidity grab, fair value gap, strong close. We're not going to go into that in this video too deeply. We'll touch upon it. But if you're like brand new to market structure and all that good stuff, well, I'm going to leave some links in the video description to my market structure series that you can watch. That's gonna catch you up on everything. So that would be better to watch before you watch this one, because this is a little bit more advanced but you want to understand the basics of market structure as well. But this is, kind of like that one of those final pieces. Okay. So we're going to go over I'm going to go over an example over here with Forex, but we're also going to go over some futures examples too. Okay. So in both markets, because of course, market structure, it's applicable to futures, to Forex, whatever market you trade, doesn't matter. All right. Market structure, liquidity, time, it's applicable to every single market that you trade. All right. Doesn't matter what you trade. So with GBPUSD, I was keeping an eye on this for a potential buy setup today, but that changed. I changed my mind on it because of this one simple thing. Okay, because on GBPUSD, this came down into like this weekly imbalance right here. It's overall bearish, sure, but we come down to like this weekly imbalance right here, which is a level of support. It's in a discount. If you go to this higher time frame, we're coming down here, and if you look closely, right there, if you look at my cursor, you see you got your lowest low in the middle, you have a higher low on the left, and you have a higher low on the right. That's a swing low right there. And what do we understand is residing beneath swing lows? Sell side liquidity. So what happened was GBPUSD came down and it took out that higher time frame sell side right there. So if you understand like the basics that I've already shared in regards to market structure, you understand, okay, we need a significant liquidity run that satisfies that requirement, because it's taken out significant higher time frame sell side. You see what I mean? So that's one thing that we saw play out. And what were some of the other tips that I shared in regards to market structure? If you recall, we want to see a strong close. We want to see the fair value gap, right? Which we got the, strong close right here above that short-term high. We got the fair value gap. So initially I was interested, but I changed my mind. And then that begs the question, what made me change my mind? Why was this not valid? Why did this sell off and take out this low a little bit later? Like, why is that no longer a valid market structure shift? So you probably have heard me say before, the liquidity is what gives it validity. Okay, the liquidity is what gives it validity. And if you can't identify that draw and what that draw is going to be, well, it's probably going to be your sell stops. It's probably going to be you. You're going to be the draw. You're going to be the one that gets taken. So you need to understand. You need to understand where the liquidity is. You need to have that draw intact. You need to have that magnet. So price actually has that pull. When I say that pull, like that magnet, that pull for price. If it doesn't have it, then you're going to get caught in a reversal a lot of times, which is what happens with many people. And then they'll go cry on Twitter, oh, market structure doesn't work. It doesn't work. No, you just don't have you don't know where the draw is. You don't understand liquidity properly. Okay. Because a lot of you, what you're doing is you're looking for any old little displacement you see. You're looking for any old fair value gap you see, because that's what your guru taught you. You just take any little fair value gap you see, and then you get stopped out over and over and over again. And then you just don't know what you're doing. You don't have a firm understanding of market structure. So let me educate you. So we get this push up, we get that strong close, we get that fair value gap right there. And it's interesting initially, but the second it takes out this, it no longer is. Why? What is the significance of this liquidity pool right here? There's a few things. I am not comfortable taking a 1 hour a pullback on the 1 hour into a discount here after it has taken out a higher time frame buy side and the trend is bearish. This thing has been selling off. It's been getting clobbered. Sure, it's in a discount marketplace on the higher time frame, but at the same time, it's still a bearish trend. And I got this thing taken out. That happens to be Asian session highs buy side, which may I remind you is a massive liquidity pool. It's a massive liquidity pool that it did indeed respect. Look how it did not clear that level. Look how it respected that level. Look how it's wicking above it and it fails to displace above that level. And guess what? Zoom out. Go to your 4-hour chart here. That happens to be what? That happens to be higher time frame buy side liquidity. It's kind of hard to see because it blends in because it's all red candles, but it's still higher time frame buy side. Look, high side in the middle, right there where my cursor is. Lower high on the left, lower high on the right. That is a higher time frame buy side liquidity pool that this took out on that 1 hour displacement. And also you got a higher time frame imbalance. So I want you to put all this together. I want you to put all that together. You're taking out higher time frame buy side. You got a higher time frame imbalance here. It also happens to be Asian session highs within a bearish trend. Yeah, no surprise. It gets clobbered. It cannot hold that 1 hour range because of everything that I just told you. That draw is gone. That draw is finished right there. It took care of it. So if that draw is finished, if that liquidity is gone, no, it's not going to respect that 1 hour range as well now. Are there cases where it will? Yes. Of course, there are cases where but your probabilities of that falling through goes way down, right? And we want high probability, right? Well, guess what? It ain't there no more. When it takes out a big level like that, it ain't there no more. And just so you know, I'm not talking in hindsight and just going in. I made that very clear because I initially posted this GBPUSD, but then I noticed, oh, hold up, we took out higher time frame buy side. So I plugged this in chat. In this chat, but I posted it in the free Discord as well. So if you want to join that free Discord chat, there should be a link in the video description, 100% free, doesn't cost you a dime to join, but you can see right here that I plugged it. GBPUSD, I said higher time frame buy side liquidity taken now, time stamped for you right there. I no longer like for a retracement lower for a buy. So I do not like it for a buy setup. I made that very clear because now liquidity is gone. The liquidity is what gives it validity. If that liquidity is gone, then it does not have that draw anymore. In fact, I like this for a short now. I like this for a short now because guess what? For what I just told you, higher time frame buy side is taken. Asian session highs is taken. It's overall bearish. And guess what we saw happen right here? Because I also understand what my opponent is, who my opponent is, because I understand my opponent sees this thing, aka the folks that believe every little displacement they see on the chart and they think, oh, there we go, there's that displacement, there's that shift. All right, so now we're going to get that next leg up. I understand that. Oh, hold up though. I have buy side taken. I now understand their stops are residing right there. I understand where the liquidity is. I understand where the liquidity is. And if you don't understand where the liquidity is, then it's you. Then it's you. So I have that buy side taken. I have that shift. I have that fair value gap on the 15-minute now. All the signatures that I've taught you, right there in play. So I have a bearish shift. I have higher time frame buy side taken. I have Asian session highs taken, and it's overall still a bearish trend. That's my next draw. Right there now. That you got to understand where your liquidity, you got to understand where your draw is. And that's why so many of you fail with market structure because you don't understand that. Like you may understand, okay, I need a liquidity grab. I need the fair value gap. I need the strong close, but you don't understand this. And that's, if you don't understand this, then all that other shit does not fucking matter. It does not matter if you don't have this missing piece. It's the same deal when I see folks talking about like ICT 2022 doesn't work, right? And then they go cry on Twitter, say, you know, in their echo chamber, saying it doesn't work, this is a better way, right? Because everybody's always trying to sell a better way. That doesn't work, do this, do this. None of you people, none of you understand what you're doing. None of you, not one of you. You don't have a firm understanding of liquidity. So yeah, if you don't have a firm understanding of liquidity, then you're just going to continue to chase these little patterns, you know, chasing these little rinky-dink quick fixes that doesn't work. You got to have a full understanding. And this is that missing piece that that you don't have, is that liquidity. It ties into it. It ties into market structure. Like it blends together. You got to blend it together, and then it makes for a full, complete picture. But nobody has the full, complete picture on here, or a lot of people don't. Again, because they want just that one quick, easy pattern. It's simple. Like what I'm sharing with you is very simple. It's very straightforward, but it still takes work to understand it. But nobody, you know, wants to do that, right? They want the easy way. So And that's what we saw take place. It ends up attacking the low as we had anticipated. So the thing with ES, like this came up, right? And it took out this buy side liquidity right here, higher time frame buy side right here. Actually, let me double check. That might not have been higher time frame buy side. It's a liquidity pool. But yeah, we came up, we took out that. So we had like that rejection after running out that buy side, right? On ES right here this morning. Let me zoom back in. So you see right here, this ES, it was running up here, right? We got that little 930 turtle soup first. 930 turtle soup, and then we got to ramp up because it's seeking that draw up above, right? It comes up and it takes that liquidity right there. It runs it out. And then what happens? We get this big displacement right here. We get this big displacement lower right here, fair value gap, strong close, etc. And what does it do? It's selling off. Now, a lot of folks got in short right here and got taken on this high. I was not interested. I made that very clear. In fact, I liked it for a buy setup at this point, which you can kind of see my drawings that I still have on there. So we have this buy setup right here that I was talking about. Just so you know, I'm not talking in hindsight. Everything I do plugged beforehand. See, ES lower time frame shift. Look forward to run out the high, the impulse move. It did run out that as well, which is valid if you wanted better risk reward on it. But you know me. You know how I do it. How I like things. I like low hanging objectives. That's just how I work. That's just how I operate. But just so you can see that was plugged. I was interested in a buy setup in this, but there was a lot of folks that are looking at a short within this range. You know, a lot of folks also that trade like IZT 2022, looking at a short within that range. And then they'll say, oh shit, yep, market structure doesn't work. Look at it, took it out again because of the liquidity, right? Now, I was actually initially interested in a short play on this, but that changed as soon as it takes out that liquidity down below. Because here's the thing, this ES at the time is bullish still. It's ramping up here. It's consistently putting in higher lows here. You see what I mean? And then this thing, it had that displacement there. And it comes down, runs out this liquidity down below right here. You see? So like right there, we came down. And this is bullish market structure at the time. Okay, it's bullish market structure here. And we run out the sell side here. We run out the sell side here. Look how it respects it. Look how it respects it. This is bullish market structure. I want you to ignore this right now because I'm going to go into that in a second because I know there's already somebody eyeing this and saying, oh, but hold up. Look, this one didn't hold up either though. Look at this one. We're going to get into that, and I'm going to tell you why that didn't hold up either, because it's, again, zoom out. But right here, this thing comes down, and it runs out this sell side. It runs out this sell side. And look how it respects those levels. Look how it's so wiki. Each candle tells you a story, okay? Each candle holds information, and the storyline here is it's respecting that market structure, that is, because this is consistently putting in higher lows. It's consistently pushing up. And then all we see right here is a stop run scenario. It has all the signatures for it. There's no fair value gap in there. It's super wiki. So now that it has taken out that sell side, I want you to kind of think of this like a tug of war match. It's a tug of war match between this 15-minute sell side, not just one, but several, 3 15-minute sell side liquidity pulls versus a 1-minute displacement range. Yeah. That 1-minute displacement range is getting fucking crushed. It's getting crushed because look what it's up against. Look at the liquidity that it's up against. The higher time frame has more of a say on what's going to happen. So you have this higher time frame, in this case it's higher time frame than a 1 minute, these 15-minute liquidity pulls versus a 1-minute liquidity pull. Yeah, that 1 minute, it's getting crushed. It's getting smoked, right? Because you refer to the market structure. It's a bullish trend. So you already, if you're looking for a short, technically you are fighting the trend. And not saying you can't counter trend trade successfully, you can. You absolutely can, but you got to have a firm understanding of liquidity. Otherwise, you get caught in stuff like this. You see what I mean? So it takes out this liquidity, and that is the time where it is no longer valid. It's no longer valid. You can't expect that to be respected at that point because it's a bullish trend taking out 15-minute sell side. So no, you can't trust that displacement range right there at that point. That's why I got taken out. That's why these highs got taken out. And that's why I was interested in a buy setup, which you saw that I plugged in chat. It came down, it cleaned out that sell side right there. It got that displacement, strong close, fair value gap. That was a solid buying opportunity. Discount marketplace right there. We got the imbalance, respects it, presses up, cleans out the liquidity right here as well. And that's what we saw take place. You see? So that was nice for a buy setup because guess what? You don't have that opposing liquidity. It already has the liquidity taken now. It already had that sell side taken, and now it's on that push up. Now, would I like that if it took out this? Let's just say it didn't give a pullback, right? Let's say it took out the sell side and just pushed up, took out this buy side, no type of pullback. And then we got it right here. No, I wouldn't trust it at that point because it already took out that liquidity. It's already got that imbalance now. So remember, you got to understand where that draw is. Okay. But it did give a pullback before doing that. Keyword, before taking that out, before testing that imbalance, we get a pullback right here. The liquidity is still there. The draw is still there. And the draw is what gives it that pull, that magnet for price to have that push up. What you got right here. Then what do you think happens? After it takes out this box and it tests that imbalance, we get another displacement. And that is a valid short play. You see what I mean? Look, right here. So, I mean, this thing gave like so many setups today. Because it actually gave some pullbacks. It didn't just like, just accelerate with any type of pullback whatsoever all the way into its levels. We can see like right here, it gives a pullback into a premium, shift, seeks the opposing sell side. That's what you saw take place. You gotta understand where that liquidity is residing. It's so important. That's that missing piece, and that's what so many of you don't have, and that's why you get tagged out over and over and over again. Understand the market structure, understand where your liquidity is, and it's going to make a night and day difference. It's going to make a night and day difference in the follow through that you get. Market structure does indeed work. I don't care what anybody tells you. Anybody who says that market structure isn't effective or it's not as effective as it used to be, they don't know what they're talking about. Just scratched off a stat. They're just clueless. They're not educated on it, and leave it at that. All right, because we do this day in, day out. If you want to join my free Discord chat where I plug these plays, I'm not right all the time. Like even when you have these signatures and you have this draw, you're still going to be incorrect. Like don't get it twisted. We're playing probabilities here. This ain't a certainties game. This is a probabilities game. But the thing is, what I'm pushing across here is when you have these intact, the probabilities are in your favor. And if you execute, then you let the probabilities play over 50 to 100 trades. That's where you win. So again, if you do want to join my free Discord chat where I plug a lot of this stuff, there's going to be a link to that in the video description. Get you a real education. Actually get an understanding of what the fuck you're doing in this marketplace. And, you'll do all right. So hopefully you enjoyed this video. If you did, leave a like, subscribe, and I will catch you later.